Hello, everybody. Hope you're well. The market update. What has been happening since last week? So, at the early last week, I suppose the weekend and Monday last week, markets tanked on the news about this carry trade from the yen and so many other things affecting the marketplace. It had a couple of tough days, and then it has gradually rebounded. The market itself has actually grown since it's bounced back and is actually higher now than prior to the pullback. So what's been going on, and has it also happened for crypto? Well, what's happened? Well, there's a long time the economy and people in America believe that Jerome Powell and the Fed are going to manage this Goldilocks zone or this soft landing. And what is a soft landing? It's where they fight inflation, bring inflation down, while at the same time don't create too much joblessness or cause retail to stop spending. And so there was a lot of information that would have come out over the last weeks and months suggesting that jobs are starting to suffer. We had this uptick in jobless claims going from 4%, 4.1% to 4.4%. So it looked like things were getting nasty out there from the point of view of jobs. Retail was said to be slowing down. Figures weren't hitting what they were expecting in a positive level, all the while inflation was being quite sticky. Since then, we've had inflation come down significantly. It is now under 3, it's 2.9. Their obviously target is 2. It seemed to be heading that direction, but they've been slow to reduce interest rates because they're afraid if they reduce them too quickly, inflation goes back up. In the meantime, the focus seemed to move from, not just inflation to also, how are jobs going? How is retail going? And we had numbers come in this week where jobless claims were 227,000. The expected was 236. So obviously it was a number less than expected. And so the markets have reacted positively to that to say, well, look, the fight against inflation is working. That number is coming down, and jobless claims are, doing quite well. They're holding quite strong. Likewise with retail, retail growth spending month on month was 1%. The predicted was 0.4%, and the previous month was zero. So again, the fear was that retail were under pressure, prices of everything had gone up, and therefore, there could be trouble ahead. But now with these numbers, they're saying, okay, all is okay. The Fed are managing to do what seemed like it was going to be impossible, which is bring the economy in for a soft landing. Inflation is coming down, jobs are holding well, retail spending is holding well, all is well in the world. And to back that up, then we had the July PPI, so a measure of inflation, and the cost of marketing, that is the PPI, and that it was 2.2% versus what they were expecting, which is 2.3%. So, in other words, the rate of increase was lower than they were expecting. And again, this is seen to be positive. Likewise, the CPI, which is the cost of goods and services, so I guess for retail, it was at 2.9%. And again, the expected rate was 3%. So again, this is seen as positive news. And so the markets have gone, hey, this is brilliant. The economy is strong. Inflation is coming down. All is good. And we can just drive on. And again, the markets have gone in a very positive way with that. However, here's my take. There's something called the lag effect. So the Fed started increasing interest rates in the attempt to pull back inflation, which had gone over 9%. They started doing that in March 22. And they kept going until they got to July 23. So they consistently increased rates over this time. And then from July 23 to this day so far, they haven't increased or decreased those rates. And most people now believe September will be the month when they start to reduce rates. It seems to be a case of how much rather than if. And so will it reduce by 0.25% or will it be 0.5? Last week, people were saying they needed to do it immediately and that it needed to be 0.75. So things can move very quickly. So what is the lag effect? So the lag effect is while they start increasing rates, it doesn't have an instant effect on the overall market, the jobs and inflation, all that. It takes a while to work its way through the economy. Some people say it takes 6 months, some 9, some 12, maybe even longer. But based on those assumptions, the interest rates that started to kick in into March would start to have an effect by now. Okay, because that's It's over 2 years ago. So certainly would expect a lot of that will be churning through the economy. They also believe the lag effect will take longer because there was so much money pumped into the economy after COVID. So many believe that it's going to take more than 12 months. It could be 18 months for the lag effect to truly take effect. And so many people believe that the lag effect has only started to kick in the last 3 to 4 months, where we've seen inflation start to come down and we see some cracks in the economy. And I would suggest quite a lot. We've talked about the record debt the government have at 35 trillion. The interest payments on that are now over 1.1 trillion. The credit card debt for consumers is at its all-time high of 1.14 trillion. Delinquencies, company closures are now moving up in a very rapid rate. There's a lot to suggest that the economy is in big trouble. Banks, a lot of what they have backing the loans that they've given out are both mortgages and certainly commercial loans for commercial premises. Most believe they are in massive trouble right now. And even the housing markets in the US looks like there's many cracks in there. So what does this mean? Well, for me, reading it as I see it, it appears to me that the lag effect is kicking into gear. It started to take effect on inflation over the last 6 months. And I think we're starting to see it take effect within the economy now as well. And so we are seeing that retail has slowed down overall and that the jobs have shown signs of weakness. And if that is the case, this lag effect has many more months to go. So even if the Fed were to reduce their interest rates, let's say in September, as expected, the effects of that won't be felt for 6, 12 months or more. But the effects of the interest rates being risen in, all through 23 up as far as July 23 have still not had an effect. And so while they might reduce interest rates right now, the lag effect of increasing the interest rates and holding them there for longer may still have a big say in where the overall economy is. That is my thesis. So if the overall economy potentially is heading towards a recession, and there's no guarantees of that, of course. The Siam rule has been triggered. That has been a leading indicator for recessions. Another leading indicator for recessions is the spread between the 10-year bond rate and the 2-year. When that inverts, usually it's a predecessor to a recession. And when it starts to uninvert, the recession is really close or we're actually in it. It's been inverted for a record amount of time now for nearly 2 years, and it's showing signs that it actually has uninverted but returned again. So there's every possibility that it inverts in a real way very soon. And if that is the case, that has been a leading indicator for many years for recession. So there's lots of stuff, in my opinion, that would suggest the US is still going to head for a recession, despite the fact that the economists all of a sudden believe that it's just going to come in for a soft landing, and maybe it does. I personally believe that's unlikely. What's that got to do with anything? Well, on the other side, we've got Bitcoin and cryptocurrency in general. There's nothing, well, I shouldn't say nothing, but there is loads of positive news. I was going to say nothing but good news, but of course, it's not all good. But the vast majority of news around cryptocurrency, Bitcoin, and so on has been hugely positive. We've institutions around the world, the wealthiest people in the world, the biggest companies in the world, banks, institutions, all moving towards getting involved with buying up crypto. And just recently, and this week, Goldman Sachs have been seen to have put in 418 million into Bitcoin ETFs, one of the biggest banks in the world. We've seen that Bitcoin miners now, when the price halved, as it does every 4 years, as the amount of money they can make for what they do, as that halves, a lot of people go out. It no longer is viable as a business for them, and they go out of business. And when this happens, something called a hash rate reduces. And normally, when the hash rate reduces, so does the value of Bitcoin. Inversely, of course, as it increases, the price of Bitcoin tends to follow. Well, now that we've had this flush out of miners that weren't able to be profitable with this new lower price on Bitcoin, now the people in it are starting to expand again, and it looks like the hash rate is now at an all-time high, which usually is a predecessor for where the value of Bitcoin will go over time. So again, you would suggest usually bullish. So again, with all the bullish news that's out there about Bitcoin, you would expect this thing would be really taking off. All these institutions, all these companies putting in very big money into Bitcoin and others. Yet we don't see that happening with Bitcoin. Why is that? Well, let's just have a quick look at the charts. And again, I'm not a chartist. I'm no expert when it comes to looking at this, but I think anyone that would look at this chart can see in general terms what's happening. We're now over 5 months going through this channel of roughly between 60 and 70,000. Of course, it's gone a little over 70, it's gone under 60, but in general terms, that's the trend. And the question I would ask is, with all of this amazing information that's happening with Bitcoin and all these people that we would have only dreamed about talking positively about Bitcoin in the past, you would expect that Bitcoin would just be taking off, going through the moon, going to all-time highs. But yet we see it going sideways for over 5 months. And my question is, what is it that's going to create or cause Bitcoin to go through all-time highs and on to 80, 90, 100 grand and more, which is predicted by most? And by the way, I believe it will in time. So why isn't it going there yet? What's going to create it to go there? And is it possible that there could be a bigger pullback to come? So while it was going through the sideways motion, again, in the main, staying above 60 grand, with a couple of dips below it, I was saying I really believed that it had to come back to the sort of 52 level, which was the last point of strength. It did that. And at that time, I was saying that 43 would be very possible. When it was down here at 50, I said, look, I think this is going to go back up to the sort of 62 level, 60, 62. It hit 62, and now it's trading sideways again. Where does it go from here? Well, if you look at its all-time high and you look at this trading, where's the general trend? You can see when it reached its all-time high here, obviously it dipped down. It reached it made another go at breaking that all-time high, but it didn't quite just get as high. But when it hit its low, it went a little bit lower and even lower. Then it made another attempt at going to break the all-time high, and it didn't get as quite as high as the last effort. And the next effort was in around the same, and the next effort was less again. All the while, these lower points are getting lower and lower. That's a general trend. What is going to break the trend? What is going to get people so excited about Bitcoin above and beyond hearing that the biggest banks, the biggest institutions, the wealthiest people, the long-term holders are getting even longer. There's huge accumulation going on by the wealthiest again around the world. So why is Bitcoin not absolutely taking off and carrying the rest of the altcoins with it? There just seems to be that overall lack of confidence for the retail market to really come in at this stage. I think by design, because the institutions want to gather as much of this Bitcoin as they can at these prices before it takes off. And retail are still afraid to come into the marketplace. What would you do if you were able to control the markets? And I'm not saying they do, but if you did, would you look for another big pullback to create another flush out of retail so institutional money can come in and buy up more? This is why, and for many other reasons, and because it keeps testing lower lows in this overall range, does the 43 mark, which is the previous, before the 51, 52 mark, the previous level of resistance, which is that sort of 41 to 43, is that going to get tested? I think with the backdrop of what's going on in the overall economy, all it takes is one more thing to break or come to surface that causes more weakness. And so while the Fed might reduce interest rates by 0.25% in September, that's already priced in by both the market and crypto. And like I said, the market took off on the good news of this week. Bitcoin's gone the opposite direction. Why is that? And so I think the overall economy is weighing heavy here on Bitcoin. Maybe there's a bit of manipulation, but I believe still that there's to be another washout. That might never happen. This is not financial advice. I'm not a chartist. Do your own research, but this is my gut feeling. So what do you do from here? If you're buying into Bitcoin or buying into an altcoin, how do you position yourself with this general concept in mind? If you believe we've hit the bottom, we're not going back down here to the 50 odd again, Well, of course, if you believe that, then it probably makes sense to buy whatever you want to buy, whether it's Bitcoin or some other altcoin. If, however, that you believe there's another potential pullback to come or even lower, well, then you might want to keep some funds available to take advantage of that if that were to happen. Because if Bitcoin did come down to 43, all coins are going to drop very, very significantly, even from where they are now. And they've already come back quite a long way. So the opportunity there could be really big. So ultimately, what do you do from here? Well, of course, that comes down to your own decision making on what you believe in all of this. But for me, my overall thesis is this: I still believe there's another big pullback to come. That might never happen. If you're playing by that idea, you certainly, it might make some sense to buy into some now, um, and DCA and dollar cost average down into others. But certainly you would be keeping significant dry powder in case this were to happen. And of course, if there's a very clear sign that the market has turned and it's on an upward trajectory from here, then you can get some of the rest of your funds in if you want to do that. Ultimately, it's a decision for yourself. So that's the general gist. That's my take. That's what I sort of see when I look at the overall macro environment, and the potential for where this can go and what might be the outcome. So ultimately, the decision here for people to look at that is, what's your timescale? If you're looking to invest with the idea of hoping to be able to get some money off the table in a week or a month or 2 months, then these fluctuations will mean an awful lot to you, and the price you buy in at will be extremely important if you're trading. If you're investing, let's say Bitcoin is your thing and that's what you want to buy, and it's currently at 57,000. Well, that's significantly less than the 73 or 4,000 and it hit an all-time high. So it's a very nice discount. And if your belief is that Bitcoin is going to be worth a hell of a lot more in 6 months, 12 months, 2 years, 5 years, then this is probably a great opportunity to buy into Bitcoin. Likewise, you could say the same with crypto altcoins. If there's particular altcoins that you believe in very strongly and you're looking at them from a 12-month, 2 year, 5 year term frame, now is probably a very good value. Will there be better value in between before this takes off? Possibly, but maybe not. And so you have to make those calculations based on what's in your current portfolio, what cash might you have left to put into it, and what's your time horizon. And with all that inside, and of course your risk tolerance to the overall situation. And so you have to take all that into account when you're trying to make these decisions. But the summary for me is, macro environment is not positive, I believe, despite what's been said. I think the lag effect will take effect, and we will see more downside risk when it comes to the economy and the marketplace. We saw what happened when this carry trade of the yen came to light. It was something I was completely unaware of, say, 2 weeks ago, and all of a sudden it made this huge difference. What other things are there out there like that that most people wouldn't be aware of? And from what I can understand, very few people were aware of prior to it actually happening. Is there something else like that to come? Or is there something hugely positive to come in the general market or in crypto itself that could drive Bitcoin up from here? These are all the factors that people have to take into consideration when they're looking at where to go from here. But my summary is, I still think there's another big pullback to come. I still think there'll be very big opportunities both in Bitcoin and the altcoins that are out there. Certainly not financial advice. It's my take on it. Do that with what you will. With that, hope you're all well. Have a good weekend, and we'll see you next week.